You're telling me the builders took the pre-sale money, didn't finish the projects, and speculated, which I guess would work in an appreciating real estate market. That's a common practice even in the United States. But what happened is it didn't work, and now since they're defaulting. But what's scary is that how interconnected we are to China's economy through companies like BlackRock, that we have significant exposure to those developments. So I don't know what's going to happen. Like you said, it's dominoes falling, and like what part of the fall are we at right now?
So the part of the fall. So right now there's about 300 different Chinese companies that are being threatened to be taken off the NASDAQ, off the stock exchange. So we are going to be seeing a significant amount of Chinese stocks more or less be pulled off. And this is because of security issues from the SEC. Mm-hmm. China, because of these bonds, has lied extensively about hidden debts in their economy. Their central bank and their public debts that are known based off the reserves and the economists that we get to speak to are highly suppressed. They're not actually allowed to show any of the GDP growth from local sovereigns or from local provinces. They can't show the amount of debt accumulated from these LFGV vehicles that were created in 2008. And the reality is we're now stuck just trying to guess where when this default is going to occur on all these bonds. So for the US markets, where are we at and like how this transition over is simply going to be probably off manufacturing and demand. I mean, if we see these bonds actually default, this means we're going to see more than likely a collapse in the financial infrastructure from local provinces. So this means local institutions, local banks. We've already seen a few local banks freeze funds. There's been protests breaking out through a few different provinces.
We've seen the videos on Twitter. It's nuts. It's like nothing. If you haven't seen the videos, look up what he's talking about, y'all. It's nuts. It's nuts.
It's crazy. And so we know it's taking place. What we just don't know is how long they can tip this over. Like, for example, China or Beijing just released a $44 billion fund to help pay off some of these default loans. Mm-hmm. $44 billion in the grand scheme of things is nothing. This was to bring back consumer confidence as their last gross domestic product report came out negative. So this means they are heading into a recession. The housing market's on a decline. And where it gets crazy is the bonds that they were selling, these LFGV vehicles, these bonds they were selling to these investors, their credit ratings were extremely high risk. They were telling these investors that obviously, they're AAA ratings, they have, they're backed by the local government, but the reality is the default risks were much higher than they were telling their own investors. So you're getting those protests breaking out, right? These people don't want to pay mortgages on homes that don't exist, that aren't ever going to exist, that will never grow. Now these financial institutions, these real estate firms, and these construction companies and enterprises, also known as SOEs, they have no cash flow because they're not getting any of their payments. So they're going to default on the loans that are provided by the local banks. So that means their debt balances and everything are going to accrue. So this isn't necessarily something to be like, I mean, yes, it's kind of scary, but there is a way to profit off this. And this comes into really only one option. And it's, in my opinion, just China is going to have to print a hell of a lot of money, just a disgusting amount of money.